All right, and there is the closing bell down on Wall Street and at the Nasdaq market site. It's market domination overtime, giving you full coverage of all the moves to get you up to speed on the action from today's trade, where we saw all three major averages advance. Yahoo Finance's Jared Blikre is standing by to break down today's moves. Jared.
Thank you, Miles. I believe we got three records in the majors. That would be the Dow, Nasdaq, and the S&P 500. Dow up a whopping 66 points, only about 18 basis points, as you can see on your screen there. But the Nasdaq up 69 basis points. That's about 0.7%. S&P 500 about 0.4. And the Russell 2000 and S&P 600. I'll just show the S&P here. Not records, but still up just marginally there. And let's actually skip over to the sector action. Here we were tracking tech before. Tech has been the leader all day, and it finished in that top spot, up about 1.5%. Utilities up 1%, and those were the only two sectors that were outperforming the S&P 500 there. There you can see the intraday in the utilities sector. Staples was the biggest loser by far, down over 1%. Second to that, you got communication services and consumer discretionary. So if you're paying attention here, one of the three mega cap sectors closed in the green today, and guess what? That has Nvidia and Apple all over it. Each of those up about 4%. Nvidia making a deal with OpenAI worth $100 billion, really just juicing the chip stocks today. Also taking a look at Tesla here, that was up almost 2%. Meanwhile, Amazon, Meta, looks like Broadcom too, also down more than 1.5%. Alphabet and Microsoft down less than 1%. And we'll take a quick look at the Dow here. If we take away the mega caps to the left, you can see we got kind of a mixed board. We got some of the standouts here. IBM up almost 2%. Salesforce up over 1%. So is Caterpillar, United Health. And so some diverse mixes in there. And if we take a look at the leaders, we can see Korean stocks. EWI finished out on top. XBI, which is biotech, that was number 2. Also in the mix, solar, SOX, I believe that's good for a record high, as did tech, by the way, XLK. Gambling, Mag 7, and small stocks, IWN. That's a Russell 2000 ETF. So we got small and big doing well today. Not meme stocks, as I indicated earlier, but I did want to end on the semiconductors, where aside from Broadcom and Intel, that is a pretty red board you're looking at. And some of the standouts there, Applied Materials up 5.5%, Lam Research 4%. And by the way, did I mention Nvidia hit an intraday record high? I'm not sure if it hit the closing record high, but that is an impressive showing, 4% for the biggest stock in the solar system. Miles.
And Jared, as you were going, I did not want to cut you off, but yes, we saw Apple, I believe, closing high for the year today. I think it got back to positive year to date on Friday, but a closing high for the year.
Yes, sir.
For Apple, big fight back for, I guess, third biggest company now? Second? I lost track.
Yeah, third biggest. But you know what? It's in the green too. So it is green for the year, up 2.26%.
All right, Jared Blikre, thanks so much. All right, well, as the three major indexes enjoy record closes, rising above from their April lows, our next guest says there may be a long-awaited leadership shift underway. Francis Gannon, Royce Investment Partners Co-Chief Investment Officer, joins us now to discuss. So Francis, last Thursday, we saw the Russell 2000 join its larger peers in making a new high. First time we saw all four majors hit records since 2021. When you look at the setup for small caps here, seen about a 35% or so rally for the Russell off those April lows. What excites you about this sector as you look at it today?
Well, Miles, thanks for having me. I think one of the biggest opportunities within the small cap space today is the fact that it is so underloved. And it's rare that we're actually talking about small caps. I've called this rally this summer that really started at the lows of the tariff kind of spasm in the market, if you will, in early April, a stealth rally. And it really has been a stealth rally. And the small caps, we think, are on the cusp of what could be a prolonged cycle of outperformance relative to large. We know that they're cheap on a relative basis to the large cap space, but the kicker here is going to be that the earnings story for small is just starting after being in a recession, if you will, for the past 2 years.
I'm curious, in your view and your team's work, what the rate cut cycle kind of mixed with, okay, we know rates are coming down, positive if you got a lot of debt to refinance. Does it say something maybe more negative about the economic cycle? How you balance those two challenges, for smaller companies that are often, more exposed to everything, not the least of which would be the economic and the monetary policy cycles?
Yeah, I think what the market is doing right now, Miles, is looking through this kind of slowdown that people are focusing on really in the latter part of this year and into the beginning of next year into what could be a more exciting period economically in the second half of 2026. I think the rate cut and potential further rate cuts help small caps. Obviously, if you look at the Russell 2000, about 40% of the debt happens to be floating rate debt. So any easing or continuation of this easing cycle will clearly benefit small cap companies. The other factor here, I think, is really comes from the fact that the one big beautiful bill that was signed earlier this year is really a reflection, and in there has a lot of opportunities for domestic businesses, especially around CapEx and the depreciation of CapEx spending. So if there is going to be a small cap cycle, I think part of it is going to be driven by earnings, and that's going to be driven by CapEx spending, which we think is just really in the early stages of taking off.
You know, when I kind of learned about small caps, like, okay, what's a quick axiom to think? How do you think of these things? It's like, oh, it's basically just regional banks. About 20% at the time was financials. I'm curious, you know, how the composition of the Russell has changed over time in terms of industry, and then thinking about the AI trade, how those smaller names have, you know, caught that bid, they play in that space, and kind of, you know, that's been a mega cap story, obviously the Nvidias of the world, but small caps, how does that story fit in? Has it fit into the Russell case over the last, you know, year or so?
Yeah, so you know, there's so many misconceptions about the small cap asset class, and it kind of is always in place, especially now in a world where people think that private equity is holding on to companies longer, and therefore the number of public companies has really gone down from a small cap perspective. And we would argue with you that most of the decline in the number of public companies alone really took place right after Sarbanes-Oxley. And so it's been relatively steady in terms of the number of public companies we as a small cap manager can really focus on and invest in. I would say when we think about AI, I think part of the key of the broadening of the overall market is really going to be this idea that AI is going to move away from the providers of AI, the names we seemingly talk about every day, to those who are going to be benefiting from AI. And so I like to say that AI is coming to a small cap company near you. And I think that's really going to be a trend in the overall broadening out of the overall market, because it is going to drive productivity and will drive further earnings growth for many businesses.
Now, I think there's a couple names, you know, that you like within the small cap space outside of just kind of the index level that we've been discussing. I think really brings us back to what we were talking about just before around this maybe domestic heavier, and not heavy industry, but certainly domestic, let's call it working with your hands industry at least.
Yeah, I mean, I think part of the opportunity set in small today, yes, there's opportunity in financials, but I as much as people want to focus on banks within the small cap space, there are a lot of non-bank financials that are always really interesting to us within the capital markets area, or even insurance, reinsurance industries, which are really interesting. But from my perspective, I think there's an enormous amount of opportunity within industrials. Industrials in the small cap space happens to be kind of a bit of a catch-all, but at the same token, I think it does represent a great opportunity from machinery type businesses to even some service companies.
All right, we'll leave it there. Francis Gannon, appreciate the time. All right, Tesla shares closing the day higher, rising over 9 of the last 10 trading sessions. Senior autos reporter Pras Subramanian stopping by to break down all the recent action that we have seen in Tesla stock, which Pras went from a broken story to one of the better stories in the market.
I mean, today got a new closing high for 2025. Last closing high was January 15th, so now we're up, 434. Stock up 6% in the last few days. 30% in a month. I mean, just a roller coaster, but with the upswing part right here, right? So we had stuff like Musk buying a bunch of shares, robotaxi expansion, among a number of things, but also just today was Alex Potter, Piper Sandler, upped his price target. He made a visit to China, talked to a lot of EV makers there. They said Chinese assembly makers there are doing better, but they still look to Tesla for guidance on AI AI products, building AI infrastructure. So that's still the positive thing that Potter sees for Tesla stock. I mean, he did say that Q3 sales will be the watershed, sort of the big moment for them, but then it's going to be a little bit weaker for next year. So a little bit of headwinds there, but right now it's about the AI trade, that the AI sort of the products that Tesla Musk can do. So that's what's driving the stock from a today point of view, but we've seen the last month has been insane, considering the fact there was a huge sort of drawdown earlier in the year.
Well, it feels like with Tesla, and we've discussed this at length on the show, off air, in the newsroom, like this is what the stock does, right? It goes up 50%, it goes up 100%, goes down 50%, back and forth and back and forth. And ultimately, this is partly what investors sign up for, but it also feels like in these periods between material updates, between earnings announcements, Musk comes out with the buy. There's a lot, like the story is just way better right now before you get Q3 delivery numbers. And then maybe you have to say, oh, right, they've been having a structural problem selling enough cars and seeing growth in that part of the business. But right now, it's like Elon's more involved, stock has a lot of momentum, shorts are finally tired of this round. So it's just a way better story as we get towards the end of Q3.
Yeah, I mean, look, next week, Q3 numbers, right, going to come out. Maybe it's already baked in. Maybe we see a blowout number, but it's not going to be. It's not going to trade on that, right?
Yeah.
It's going to be about what we think is the zeitgeist story of Tesla right now. So,
yeah. All right. Let's keep our eyes on China. Another stock on the move today. BYD. That stock slipping on news. Berkshire had fully exited its stake in the EV maker.
Yeah. CNBC reporting that with a filing that showed that Berkshire Energy Hathaway, which actually owned the stake, had drawn it down to zero. They first report that. So, yeah, I mean, this is a long story for this company, BYD's investment with Warren Buffett and Munger, who wanted to do that stake back in 2008, which was once a small stake, ballooned up to $7.7 billion. That's not nothing, but in the world of Berkshire Hathaway, that's like, kind of chump change. But, they had that big stake grew up, and then in 2022, they started cutting it down a little bit by a little bit by a little bit. It kind of coincided with the big growth period for BYD. We saw, even right now, the company still beating Tesla in Europe with EV sales, but things are slowing down a bit, still growing, but slowing down a bit. They had to cut down or internally cut down their targets in China. A lot of competition there, maybe a market that's sort of exhausted there with all the EV buying. But yeah, so got to give it to Oracle, right? And the guy knows when to kind of make a trade, when to end it, and he timed it perfectly, I guess.
Tough talking about exhausting trades and you're talking about electric cars. Come on there, guy. All right, you just were in Europe. What was the word on the street there? Channel checks, as they say the business for EVs on the ground.
It's interesting, man. I was in Amsterdam, right? Okay, my man in Amsterdam. So, they have EV charging outlets on the canals. Like the EV, the infrastructure issue is not a problem there, right? So I can see why that trade still keeps going on in light of changes in the industry. But in America, you just don't see that infrastructure yet, right? So I think that's sort of my main takeaway.
Okay, all right. You got to go to the Wawa by my house, and everyone sits there for a half hour, looks at their phone while their Tesla charges. All right, Pras, thanks so much. All right, Nvidia and other chip giants dominate the artificial intelligence space, but there's more than one way to play the AI trade. We're taking a deeper dive into investment opportunities beyond the semiconductor space with the Yahoo Finance playbook. And joining me now is Zeno Mercer, head of robotics and AI research at TMX Verify. Zeno, we said we're going to talk about other stuff. Let's start, though, with Nvidia and what we saw from OpenAI today. We were joking earlier on in the program. I kind of catch myself when I'm announcing the news. It's 100 billion. Right? Like I want to say 100 million, but I guess that's where we're at now. I'm just curious how you think about those zeros. Let's just start there. The scale that we're seeing and the way the market digests news that we're going to see a $100 billion investment, stock goes up 4%.
Yeah, I mean, exactly. It's their money being invested there. So that's kind of funny that we're seeing this a bit circular AI data center economy. But as a reminder, this comes off the heels of a couple of weeks ago, the OpenAI Oracle announced $300 billion deal, which I, among many others, was a bit skeptical of the financing of. So it seems like there might be some in-house partnership engineering to make it happen. Maybe in a way similar to how Microsoft was financing and partnering with OpenAI earlier on. We're starting to see, obviously, these things branch out. Nvidia is facing some headwinds in China, so they're looking for other kind of growth spurt opportunities. That's another thing that's been in focus for us as well. But obviously, this isn't just 100. If let's just assume this $100 billion goes through and they invest, they're not the only people. Like, it's not $100 billion going back to Nvidia. There are a lot of partners involved that will get upside not only from this Nvidia partnership, but all the other AI big data center developments that are happening around the globe, including with competitor products from AMD, even Google TPUs, and all those other build outs. So again, there's a lot of players involved in these various ecosystems.
It feels like we're kind of talking, let's say, like the heavy industry part of the AI cycle, right? It's big data centers, it's a lot of chips, but you're thinking about things like robotics, automation, which kind of feel to me, the more I think about it, more I read about it, like that feels like where AI is going to make a larger impact on my life in 5 or 10 years than how many chips are in a data center in Utah or whatever it is. Like, what are those opportunities like, and what are companies, maybe some opportunities you see in those spaces, that robotics, that automation area that is part of the AI trade, but I think just doesn't have the buzz the way some of these mega cap chip related names do.
Yeah, I think it's a great way to look at it, and it's how we've looked at it for a long time. As you know, we were behind the world's first robotics index and ETF that was launched in 2013. So we've always kind of had an eye and focus to that physical automation. And if you look at a similar parallel story of like the silicon build out that we're seeing now, robotics, and let's call it the edge and inference of AI, its nexus and polymorphism into the real world, we see a different and more broad-stroked set of players involved. So you obviously have power involved. So you have companies like Infineon and others that are helping, not just help with power utilization in data centers, but at the edge and robots, drones, whatever form factor that appears. You not only have sensor compute limitations and power compute limitations, but form factor. So companies that help get the max value, and that involves like energy, form factor, and quality, that's really going to be the table stakes for developing that next frontier. And obviously, robotic simulations are accelerating rapidly to enhance these capabilities. So, going from sim to real, which is how the industry phrases it, involves having the right hardware and software stack. So you kind of get both of that, like that physical automation and digital automation within robo and think strategies. But again, with Ambarella, for example, at one point traded at $200 per share. It's at $85 per share. It's starting to get that inference and edge economy uptick. They got a pretty big partnership with Insta360 for 360-degree camera footage. But if you start to think about like, okay, what are the next bigger growth factors? It really is that edge intelligence, and it really hasn't been priced in the same way. And these companies are smaller market caps too, so they have more room to grow. And at a certain point, there's only so much money the economy can afford to invest in a specific area. We're kind of in this like game theory, power dynamics theory, data center build out. But where does that trickle into? And eventually we'll see more and more of that compute happening on the edge with smaller models and autonomy. But let's not forget that it will be tethered to the cloud. So connectivity is also a big consideration here. And so names like Cloudflare, Qualcomm, and MediaTek are all very important to that more, we'll call it even longer duration, maybe even a bigger opportunity in these data centers. Maybe data center is the biggest investment of the next 2-3 years, but we'll start to see these other areas really take off. And I think earnings season, for example, really started to show more excitement about this, especially we had seen several years of a downturn for the robotics industry, which might surprise many people listening here today.
Yeah, it's interesting just looking at that Ambarella stock chart. It's like, oh, there's still COVID overhangs out there. Stock's still down from where it was the end of 2021. Quickly, you mentioned hardware, so it made me think of Meta, what we saw from them last week. And I'm just curious how you think about, let's say the way they're like combining their previous, metaverse AR ambitions, combining it now, tethering it to what they want to do in AI, and making that all part of one story, and both the technical side of it and then what they hope to be a large consumer side in the end.
Yeah, look, I was never that excited by metaverse as pure metaverse, like virtual reality. It's like most of our lives and really should be in the real world. So I've always been excited about things that can enhance our daily living. Their latest Meta display and neural bands are a step towards that. The SDK is currently limited to their ecosystem. So I think that's something that needs to happen. But long story short, for those that missed it or haven't really known much, they now have these glasses that have a little display that's pretty seamless, high quality display that's there, and you have a wristband that comes with it that you can now control. So you're eliminating the keyboard, the mouse, and my thought is eventually they'll open up the SDK to partners to do things like control things around your home, like replace remotes. And so what you're really looking at is something I've been calling for a while, like the post-smartphone economy, but we've been stuck with our little comfort bricks for a long time now. And we really can move past that. And again, that requires, you look back to Google Glasses, which I had a pair of 10 years ago as like a little demo. I actually wanted at an event. But we've really been hardware constrained and software constrained. And both of those are improving to the point where you can do local and cloud compute and the connectivity on a device and a form factor that is comfortable for a human, not just a robot. But the two have a lot of parallelisms in terms of how they're both combining at the same time to provide real-time, let's call it sense, analyze, and act capabilities. And that's kind of one of the mottos of the robotics industry, is what kind of defines a robot. So again, we are becoming a little bit more cyborg, but also getting kind of like Fantasia-like powers. Now, I don't even have a Facebook right now, so somebody like me, I need to see it connected to other things. But again, there's an entire hardware and software stack of winners that go from, the companies helping Taiwan Semiconductor make these chips on the inference side and the edge compute side for a Meta, but also the connectivity and sensors and up and downstream there. So again, really excited about all these different areas coming together, especially as we head to 2026. And I think we're starting to see that pull through in the strategies too.
Yeah, agree. I'm tired of having a phone, but the only solution, I guess, is going to be more technology someday. All right, Zeno, we'll leave it there. Thanks so much.
Thank you.
All right, time now for what to watch on Tuesday, September 23rd. Starting off on the earnings front, a couple of big names reporting on Tuesday. That'll be Micron and AutoZone. Micron announcing results for its fiscal fourth quarter after the markets closed. Analysts expecting a strong quarter for Micron, driven by demand for its memory chips, especially the high bandwidth memory used in AI servers. And taking a look at the Federal Reserve, we'll be getting another round of commentary on Tuesday, including remarks from Fed Chair Jay Powell. Powell's comments come after last week's rate cut from the central bank and forceful commentary from his new colleague on the Fed board, Stephen Myron, who said Monday a Fed funds rate could be as low as 2%, given what's going on in the current environment. And finally, the economic calendar will be highlighted by the preliminary reading on manufacturing and service sector activity from S&P Global. Earlier this month, S&P's manufacturing PMI for August showed the index registering its largest monthly gain since May 2022. And that'll do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all your coverage leading up to and after the closing bell. But don't go anywhere. On the other side of the break, it's Asking for a Trend. I've got you covered for the next half hour with the latest and greatest market moving stories. Stay tuned.